Alright everyone, welcome to the channel. In this episode, I'm going to be updating my educational playlist and I'm going to be teaching you a technical analysis pattern that I myself have pioneered that I like to call bunny hills. Now, bunny hills are a great way to identify and distinguish between fake outs and confirmed breakouts within the market. For this technical analysis pattern, we're going to need three different things. So that being said, let's hop over to a fresh chart so we can do it from scratch together. Now, what you want to do is you want to head over to the indicators and you'll need three things. Number one, you'll need the moving average. Simply type in moving average, slap it on your chart by clicking on it. The next thing we're going to need is the squeeze momentum indicator. So simply type in SQZ space MOM and you'll see this indicator down here, the squeeze momentum indicator by Lazy Bear. The third and final indicator we need is the EMA ribbons. If you type in EMA, it should be the first one that comes up, but if it doesn't, simply type in EMA ribbon and it is this one here by someone called Domen. Now simply click on that. And we have everything we need to start off and learn how bunny hills work. So for this, there's a few caveats for bunny hills. Number one, they work best on the 4-hourly time frame, and I'm going to be teaching you the other caveats as we get later on into this video. I'll do it towards the end, but with that being said, let's jump right in. So everything on the chart is currently set up almost perfectly, but what I recommend to do is to head over to the EMA ribbon, click the cog, click on style, and with the 21 EMA and the 55 EMA, thicken these up a little bit so you can see the short-term moving average and the long-term moving average on the top very easily. Then you want to go over to the moving average that you've just put on. I'm going to keep it blue, you can put it any color you want. I'm simply going to make this line about 3 times as thick as the average one. And then you want to head over to inputs and change this from the 9. And then you want to change this over to the 13, and you want to select the daily time frame. It's very imperative you put this on the daily time frame. So why we do this is because when we're looking at the 4-hourly time frame, it's very easy using bunny hills to, like I said, distinguish between fake outs and confirmed breakouts. So let's jump right into this. Now, a bunny hill is when you have two indicators in correlation showing you that you've had a short-term breakout, and we pair this with the EMA ribbon. So if you look down here at the squeeze mom, this is our momentum indicator. What you will notice, if we thicken up this line by quite a large amount, if I change this color over to purple, this should be all good from here. Let me get rid of this. There we go. So what you'll notice is on the squeeze mom, you have something that looks very reminiscent of bunny hills. Now we've got 1 here, 2 here, 3 here, 4 here, 5, and once again, we're currently witnessing 1 at this moment in time, so we don't know if this is going to roll over at some point soon, but at least at this moment in time, we can draw something like this and estimate this could be what is playing out. Now, if you look to the upper side of the chart, let me flatten the squeeze bomb a little bit, you will notice that these bounces in the squeeze bomb correlate to bounces in the price action. And what makes these bunny hills is when you have a small ramp up in the lower time frames on the squeeze bomb. So you've got a run up to this bunny hill, and what you notice is this correlates to the price moving into the 4-hourly EMA ribbons. This is what constitutes a bunny hill. So right off the bat, we've identified our first bunny hill. You can see our second bunny hill here, where we've bounced in terms of price. The squeeze mom's bounce over here. You can see a bounce in the squeeze mom, a bounce up in the price into the EMA ribbons. Once again, you can probably identify the rest. It really isn't too much of a complicated indicator. And now at this moment in time, we are currently witnessing something that could definitely play out as another bunny hill, but we're going to talk about what we would need to see a confirmed breakout. Now, why this is so important and why we do this on the 4-hourly time frame instead of the daily time frame is because the daily squeeze mom is very much a higher macro indicator, and looking at the 4-hourly time frame, this will perfectly put you in a good position to notice when a short could be coming up. Now, for example, as of the time of recording this, we are currently sitting in a bear market, and the bunny hills, they categorically work best when you're in a downtrend or you're lollygagging to the downside / sideways. So as you can see, the direction of the trend is very much slowly bleeding out to the downside. And as such, if we look at the bunny hills, you can see we've got a plethora of bunny hills coming up into the EMA ribbons and getting rejected every single time. Now, what you will notice with the bunny hills is you've got a high, lower high, lower high, lower high, lower high, and at this moment in time we're starting to push up from the previous lower high, which is very, very interesting. So this could potentially be a trend shift. Another indicator which is great to pair these with is the 13 EMA. And why is it so great to pair this with the 13 EMA? Well, the 13-day EMA is such a good signal when you are in a downtrend or when you are in an uptrend. It's categorically pretty much always calls these flips. So for example, you can see, we flipped bullish for Solana at $84, we ran all the way up to 140, we flipped bearish at 120, we got rejected from this at 105, rejected again at 94, once again came into this at 52, rejected at 47, rejected at 43, rejected at 35. So what you will notice with these bunny hills is, like I said, these categorically help you to identify when you have fake outs. And as you can see, all of these runs up to the upside that got slapped down by either the 13 EMA or the EMA ribbons are categorically very, very easy to identify as fake outs when we are looking at the bunny hills. Now, what would we need to see a confirmed breakout? Now, once again, we're going to be looking at the 13 EMA and we're going to be looking at the EMA ribbons. What you would want to start to see is the short-term moving average, which is this thicker red line to the downside, crossing over this slightly lighter but still thicker red line to the upside. And with this, we would have a bullish EMA flip. Now, that is step number one on what you would need to see a bullish flip. Once again, you would need to see the short-term moving average move above the long-term moving average on the 4-hourly EMA ribbons, and that is when you could categorically state we have had step number one. Step number two, you want to see a continuation in the squeeze bomb. So for example, if we find a vertical ray and we mark, if we look down on the squeeze bomb, and you'll see this moves into phases of light green, which is indicative that bulls are in control. And as soon as you can start to see that the squeeze bomb starts ticking over into that dark green, most of the time it pretty much always categorically states that you're about to roll down from the hill. And this makes sense because this is a momentum indicator. So if we mark every single time, bear in mind we're not looking at the exact top of these prices, we're looking at when the squeeze bomb started to tick over into its dark green phase. And as such, if we do look at this, you can pretty much see that as soon as the squeeze bomb starts to top out, price rolls lower, squeeze bomb tops out, price rolls lower, rolls lower, rolls lower, rolls lower. But at this moment in time, when we do look at the 4-hourly squeeze bomb, we're actually seeing a few bullish signals. Like I said, number one, we are having that where we are setting up for a potential 4-hourly EMA flip. Number two, we are having continuation in the squeeze bomb that is continuing to move to the upside. And number three, this is the most important of all because, for example, you need these exact three things to play out before you can categorically state that you are in a bullish uptrend. Number three, once again, most importantly, you do need to come down to the 13 EMA after you have a flip, and then you need to back test it, confirm it as support, and then break above the invalidation point, which at this moment in time you can see we got rejected and started to move down at 36.85. So if we look back at previous trends, what you will notice is, we have had times where we do flip above the EMAs, we come down, we back test the 13 EMA, that is, the first two steps, but then you get pushed down because you don't bounce up from the support and you don't take out the invalidation zone. So that is a very, very easy way with the bunny hills, like just like we did here, 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 and just like we faked up to the EMA here. It's a very, very easy way to categorically distinguish between fake outs and bullish breakouts. So now, before we wrap up the video, I just wanted to give you 4 tips to help you improve your use of the bunny hills. Number one, this is best used on the 4-hourly time frame. Number two, it is best paired with the 13 EMA for the best results. Number three, you must wait for a confirmation of the breakout of the 4-hourly EMAs, and you must wait for a confirmed breakout of the 13-day moving average. Number four, the lower the squeeze mom bounces, the more bearish it is. The higher the squeeze mom bounces, the more bullish it is. So for example, if we look at what we're seeing right now, we can very much see that this bounce is really not slowing down, and at this moment in time we are pushing up very, very strongly, and as such you can see we have managed to almost fill our first two bullish signals. We've almost flipped the EMA ribbons. It looks like we're coming back to back test them. But once again, you would need to wait for that confirmed breakout. And if we find an example of when a squeeze mom flip was very, very bearish, you can see right here, we've got a very, very tiny bunny hill in the squeeze mom correlating to a bunny hill up in the price action. And subsequently, you can see from the bounce, we only moved up 14.4%. Whereas if we look at this massive, massive engulfing push up on the squeeze mom, you know, even if we don't want to measure it from the exact bottom and we want to measure it from the candle body close, you can see this was a 37% move. And if we are measuring it from the bottom, you can see this was a 73% pump. So once again, the bunny hills is a technical analysis pattern that I myself have pioneered. You will not be able to find any information about these online because based on my trading on my YouTube that I've been doing for the past 6 months, and also I've been a trader in both the stock market and the cryptocurrency market for many, many years now. And as such, I've found that this pattern plays out with a very, very high degree of certainty all the time, which is why I did want to teach you this. I wanted to share with you something that I personally use when I'm trading in lower time frames to once again categorically differentiate between a fake out and a confirmed breakout. So I hope you enjoyed today's video. I would just like to say this is one singular video, one singular educational video out of an entire series worth of educational content that I do provide for free over on my channel. So if you did want more educational info, if you wanted to learn how to use the squeeze momentum indicator, if you want to learn how to use moving averages, if you want to learn how to calculate death crosses and golden crosses, and many, many more things, be sure to head over to my playlists, click on the educational series, and you can see I've got everything from Elliott wave theory, EMA ribbons, moving averages, death crosses, bull market support bands, comparing other asset classes to Bitcoin, how to overlay charts on top of each other on TradingView, how to quantify volume traded, how to use Fibonacci candles, Fibonacci retracements, how to customize fibs, how to read the Solana blockchain, and also, you know, even things that are, you know, very, very niche, like how to identify what a cryptocurrency security is. So once again, this is just a single video out of my entire educational playlist that I will be updating today with some more videos. As always, I hope you enjoyed this video and I hope you found some value in this content. Calway out. Peace.